I would now like to turn the call over to your host, Andrew Haight. Thank you, and you may begin.
Great. Thank you so much. So again, my name is Andy Haight. I'm an economist here at the U.S. Census Bureau at our headquarters office in Maryland, and I want to welcome and thank you all for joining our webinar this afternoon, or maybe this morning for those of you on the West Coast. Today's webinar is going to be an overview of the business size data that we publish as part of the Economic Census. And before I get started, I want to very quickly just mention to you all that we are testing out a new option on the audio today. We're using an audio broadcast feature in WebEx. So hopefully you all are hearing this either via the phone or via the audio broadcast feature. For those of you who did call in by the phone, you will be able to submit your questions at the end of the presentation via the phone. Our operator will queue you up, and I would encourage you all to bring all the tough questions that you have about our business size data. That would be fantastic. For those of you who connected via the audio broadcast feature, you will need to enter your questions via the chat, and we will, of course, get to your questions. So today we're going to be exploring a couple of aspects of this business size information that we have at the Census Bureau. To get us started, I'm going to talk very briefly about what data have we released so far from the 2017 Economic Census and talk a little bit about what's coming next after these size data. Then I will briefly talk a little bit about the size statistics that we have historically published in the Economic Census, including what we published in the 2012 Economic Census. And then I'm going to talk a little bit about how different these data now are for the 2017 Economic Census. And I will say different in a very good kind of a way. Then finally, we'll be talking about how you can access these data in our new data.census.gov platform. And I do have a colleague of mine on the call today to answer any specific data.census.gov questions about these statistics at the end of the presentation. So thank you very much, Keen, for joining us. And then finally, at the very, very end, I'm going to very briefly talk about the other business size data we have from other Census Bureau programs. And then finally, again, we'll do the Q&A. So to get us started, this is a slide I use in a lot of presentations that I do. I sort of consider it my shock and awe slide. Most people, if you were to ask 10 people on the street, what is the U.S. Census Bureau? They would tell you that we count the U.S. population once every 10 years. But the decennial census is just one of more than 130 programs that we conduct each and every single year. Those demographic or household-based surveys include programs like the American Community Survey, the ACS, which is a fabulous resource of demographic, socioeconomic, and housing data. And these are an amazing resource for small business owners and entrepreneurs because it helps those people understand something about the demographics of the communities where their businesses are located, who their customers are. But in addition to those demographic programs, we also conduct 58 business surveys, monthly, quarterly, annual, and periodic programs that measure the private sector economy. They include a census of government that covers the public sector, but it also includes the Economic Census, which is what we're going to primarily be talking about today. Now, the Economic Census is a very important program at the Census Bureau because it is the most detailed economic program we conduct at the Census Bureau. The Economic Census covers the most detailed industry breakout that we publish in the Economic Census. They include nearly every 2 through 6-digit NAICS code that is covered by the Census Bureau. There are a few exclusions. We do not publish data on the agriculture sector, which is NAICS 11, and we have a few other exclusions as well. As you can see on the slide, I have included the link to the list of the exclusions from the Economic Census. And just as a reminder to you all, these materials will be made available to you after the presentation is done. In a week or so, we'll be posting the recording, the transcript, and this PowerPoint file. So you don't need to be frantically writing down the information here. The Economic Census is also a very important program because it publishes the most detailed geographic information that we have on businesses in the United States. Data are shown at the national, state, metropolitan area, county, and even place level. Places is the term that we use to talk about cities, towns, villages, and boroughs. And in the Economic Census, we include as valid geographies in the Economic Census every incorporated city as well as unincorporated places, what we call census-designated places, of 2,500 population or more. So yes, there are some very small little towns in the United States that we wouldn't have separate Economic Census data for, but we do cover a lot of them. Now, for the purposes of today's presentation, the other dimensions that we publish are very important too. In the Economic Census, we publish data by business size, and we'll be talking a lot about that business size data that we have in the Economic Census and what you all can be doing with it in terms of understanding the importance or not of small businesses in the United States. Those other dimensions also include things like franchise status. Franchise data are not actually part of our business size reports, but they are somewhat related. As we are thinking about the importance of small businesses in the United States, often those small businesses could be franchises, and how a franchise business operates and how it can respond to a shock or something like the pandemic might be very different than how a similarly sized small business that's not a franchise might react. The Economic Census is our most detailed program in terms of the other data variables that are shown. We publish over 200 unique statistics as part of the Economic Census. They include core data variables like number of establishments, or what we call a business, employment, payroll, and some measure of business output, which would include things like sales, shipments, receipts, or revenue. But we also publish a variety of other statistics that are specific to certain industries. So, for example, in the manufacturing sector, we publish detailed information on inventories and capital expenditures and assets and depreciation. Now, last week, I did a webinar on the product lines data that was just released about a month ago from the Economic Census. This is a detailed data set that provides information about the products and services provided by businesses. So, for example, if you are interested in looking at data on grocery stores in your state, and you wanted to look at the total sales of grocery stores, those data would be published in our regular statistics. But if you then wanted to break out those grocery store sales into each of the different product lines that those grocery stores provide, think about things like produce or poultry or baked goods or other kinds of things like that. Those are product lines, and we publish detailed data in the Economic Census on them. I would encourage you all to check out the recording on the webinar we just did last week on the product line data. Finally, for the Economic Census, these data are released in a couple of our main tools. Data.census.gov is our primary data release tool at the Census Bureau, our enterprise dissemination platform, and the Economic Census data are all being released on data.census.gov, but we have also included some of these data in our Census Business Builder data tool, as well as some other tools. So today's session is about small businesses. And when we think about the official definition of size, of what is a small business, that definition comes from the United States Small Business Administration, or SBA. And I provided a link to the SBA website here on this slide. SBA defines a small business based upon the size of the firm. And a firm, then, is a group of one or more establishments. We typically think of firms like companies. A company can have only a single location, but a company could also have multiple locations. So SBA defines a small business based upon the size of the firm. They recognize a generic definition, which is firms with 500 or fewer employees are considered small businesses. To many of you, that firm 500 cutoff, employment cutoff, might seem ridiculously large. So in fact, they actually had industry-specific definitions in something called the Table of Size Standards. And I've provided a link to that size standard document here on the slide. On the right-hand side, you can see a screenshot of just one little piece of this Table of Size Standards, specifically the piece for the mining sector. And as you can see, these size standards are industry-specific. For some of these NAICS codes that are shown, the size standard is based upon how many employees. So if you were thinking about gold ore mining, a small gold ore mining business would be one with 1,500 employees or fewer. However, if I look down a little bit further at things like support activities for oil and gas operations, that size standard is based upon the revenue or the sales of that firm. Firms in the oil and gas operations support activity industry that have sales of $41.5 million or less are considered small, where those that have sales more than $41.5 million are considered not small. We can sort of say large. The Small Business Administration provides an amazing wealth of services for entrepreneurs and small business owners. But one thing that they don't really provide too much is data that talks about the importance of these small businesses. They have lots of resources that are available for entrepreneurs and business owners to help them start their business, to help them grow their business, to help make sure their business is successful through a variety of ways. It's an amazing organization, but they don't really provide very much in terms of data about the importance of small businesses. So that's really where the Census Bureau comes in. And historically, we have published a lot of size data as part of the Economic Census. For the 2012 Economic Census, we published over 106 size tables in our American Fact Finder application for the 2012 Economic Census. Those tables were grouped into two broad categories: establishment-based tables and firm-based tables. Firm-based tables are tables that are like those SBA definitions, the size of the firm based upon its employment size or its revenue size. Firm-based tables also include breakouts on whether that business has a single location, what we call a single unit firm, or whether it's a multi-unit firm. The firm size tables also include data on concentration ratios, how concentrated the industry is in the top companies in that industry speaks a little bit to the size of that business. And finally, the firm-based tables include things like legal form of organization. How is that firm legally organized? Is it a corporation or is it a partnership or proprietorship? We typically think of small businesses as partnerships or proprietorships. Corporations are usually thought of as larger businesses, although that may or may not be really true. But in addition to those firm-based tables, we also publish establishment-based tables, information that breaks out the employment size or revenue size of the individual business location as opposed to the firm. And when we get into the data a little bit in a few minutes, you'll actually see how different the statistics look when you think about small business from an establishment perspective, an individual business location perspective versus a firm perspective. For example, let's say that Andy decided he was tired of working for the Census Bureau and I wanted to start my own restaurant. If I started my restaurant and I had my 5 or so employees working for me, in my single location, I would certainly be thought of as a small restaurant. But if I got really good at this and I started 10 restaurants, each of which had 5 employees, then suddenly I am a 50-employee firm as opposed to 10 5-employee individual establishments. And when you think about the ability for a company that may have multiple locations, ability for that company to weather economic shocks like a pandemic, one could argue that firms, that companies that have multiple locations might be able to weather that pandemic in a different way than individual establishments would. So we provide data for both ways. The data in those 106 tables was published in separate data sets for each and every single NAICS sector. So, for example, if I was interested in looking at employment size of establishment data for manufacturing and for retail, so I want to look at small manufacturers and small retailers, I would have to go to, for the 2012 Economic Census, 2 separate data sets to get that data. When I looked at those 2 separate data sets, the structure and content of each of those data sets might have been quite different. The data variables that are published in the manufacturing table would be very different than those published in the retail table. The actual employment size breakouts, the categories themselves, 1 to 4 employees, 5 to 9 employees, 10 to 19 employees, et cetera, those breakouts might have been very different for manufacturing versus for retail. And even the levels of geography shown might have been very different. So because of those differences, it was very difficult, some might even argue impossible, to compare data across sectors, to combine those different data sets and then compare that data. Now, while it wasn't actually published as part of our size statistics in 2012, we do publish those franchise data as part of the miscellaneous subjects series. Now, for 2017, we have fixed a lot of the challenges that users might have had in 2012. Number one, those 106 or so tables have been consolidated into 7 complete tables. 2 tables by employment size, or establishment size, and an employment size of establishments and a revenue size of establishments table, and 5 tables based upon firm size. Employment size of the firm, revenue size of the firm, the single unit, multi-unit, the concentration, and the legal form of organization tables. So now instead of having to wade through those 106 files to pull the data for each of the sectors you're interested in, you can now go to consolidated tables. And for me, as a bit of a data nerd, this is a massive improvement in the usability of our data. In addition, in consolidating those data, we did standardize the breakouts that were shown by each sector. So instead of having a different employment size of establishment breakout for manufacturing than what we had for retail, those breakouts, those employment size ranges, are now standard across all sectors. Now, I will say openly and honestly that does mean that some of the detailed data you might have seen in the 2012 Economic Census might be a little different than what you're going to see in the 2017 census. But I will say that even though you've lost some additional detail that we had, the consolidation and the fact that you can much more easily compare those data across sectors to understand the importance of small businesses in your areas across multiple sectors of the U.S. economy is a huge step in the right direction. And finally, those franchise data still are a separate release. They're still being released as part of the miscellaneous subject series. Now, this slide here provides some information about the release schedule for the 2017 Economic Census. And as you can see, I have circled the section of the schedule that shows when we are releasing these establishment and firm size reports. These data just went live on Thursday, just last Thursday. So it's very recently released. And then we'll be moving forward into the middle of next year, releasing the final set of reports, those miscellaneous subjects reports. So let's talk about those different breakouts that we were interested in. The first thing I want to talk about is employment size. Now, when we think about the size of a business broken out by its employment, you're going to see 2 types of patterns when we look at industries in the economic census by employment size. And these are specifically the employment size of establishments tables. You're going to see industries like convenience stores, where you have a lot of businesses, 14,051 individual establishments in this industry that have very few employees, less than 5 employees. And you're going to see a similar pattern in the revenue or the sales of those businesses. Those establishments that have less than 5 employees, not only are they numerous, there's 14,000 of them, but about $8.9 billion of the total revenue of this industry, it comes from those little tiny small guys. So when we think about the importance of small businesses in terms of the convenience store industry, we can clearly see that little tiny establishments are not only important in terms of the number of them, but they are also critically important when it comes to the sales, the importance, the share of this industry accounted for by these small guys. Now, I do want to point out to you that you'll notice that the columns, the bars for 5 to 9 employees and the 250 plus categories are missing. There's no bar there, and you'll see that both in terms of the number of establishments and in terms of the sales of those establishments. When we publish data in the Economic Census, we are bound by Title 13 of the U.S. Code to protect the privacy of individual businesses. And in protecting that privacy, we have to make sure that in publishing the data, that a data user would not be able to find out information about individual businesses that would then disclose the identity. So, for example, let's say there were only 2 establishments in the convenience store industry that had 250 employees or more. That's kind of scary to think of a convenience store that has that many employees, but let's just pretend that there were 2. We would not be able to publish the data for that industry because in publishing it, if I was the owner of one of them and one of you on the call today was the owner of the other one, you could easily subtract your data from the published total and know exactly how many employees I have. You would know exactly what my sales are. You would know exactly what my payroll is. That would be a clear violation of my privacy. And that's what you're actually seeing happening here. We've had to suppress the number of businesses and the sales of those businesses in that largest size category, the more than 249 employee category, because of privacy. When we have to suppress one cell, one section of data, we then have to suppress another to make sure the user couldn't back into that suppressed number by subtraction. So, for example, if I just took the sales data for the industry and subtracted all the published cells of data, I could then back right into that actual published, the suppressed number. So in this case, the 5 to 9 category happens to be the category that we had to suppress the data for. To be quite honest with you, I'm not sure why we would have picked such a large category. I suspect that a large number of businesses in the industry are in that size category, but that is the reality of what I found when I actually pulled the data live myself. So here's an example of an industry where the number of establishments that are small mirrors the sales of those establishments that are small. I could have very similarly looked at the employment data or the payroll data or the average annual payroll per employment data. And I would have seen that in this industry, not only are convenience stores significant in terms of the number of them and in terms of the sales of those little guys, but those little guys also have the most employment and those little guys have the highest amount of the payroll. So the 3 or 4 dimensions, if you will, all mirror each other. Now, this industry is the opposite. This is the computer and electronic product manufacturing industry, and we're looking at the number of establishments by employment size of the establishment. We can clearly see that there are a lot of 4,965 businesses that have fewer than 5 employees that are in the computer and electronic product manufacturing industry. Only 639 of them have 250 employees or more. However, when I look at the sales or the shipments in this case of those businesses, I see exactly the opposite pattern as we saw in terms of the establishments themselves. Those little tiny guys make up a tiny fraction, less than 1% of the total sales of that industry. There's a lot of them, but they don't really account for very much in terms of the size of the industry. Whereas those large guys, those businesses that have 250 employees or more, make up the lion's share of the shipments in this industry. So when we're thinking about the importance of small businesses, on the previous slide, we can clearly see that for convenience stores, small guys, the ones that have the smallest number of employees, is very important in terms of the number of them and in terms of the revenue of those businesses. But when we think about this particular industry, small really is important in terms of the number of those businesses, but not really important when it comes to the sales. The small guys, if you were if some of them were to close, the lion's share of the shipments of that industry would still continue because of the larger guys account for such a large share of that total. Now, these two charts that we just showed, the 2 pages, looked at 2 industries looking at establishment size or employment size by establishment. We also publish employment size of firm level data. And like that previous slide, here's a slide that looks at the number of limited service restaurants, what we typically think of as fast food, broken up by the employment size of the firm. So we can see that there are a lot of limited service restaurant firms that have a very small number of employees. 37,000 or so of them have fewer than 5 employees. Another 27,000, almost 28,000, have between 5 and 9 employees. 28,000, about a little more than 28,000, have 10 to 19 employees, et cetera. So you can see a big chunk of them in these very small categories. But once again, we see how firms that have 250 employees or more really dominate in terms of the sales. And this is a really interesting industry to consider, because when we think about the impact of restaurants, and in this case, fast food restaurants, from the pandemic, these firms that have a lot of employees are probably firms that have a lot of establishments. So there are a lot of these little locations. If we look at the establishment size data by employment for limited service restaurants, we see that there are a lot of small limited service restaurants that have very few employees, but many of those very small establishments are owned by the same company. And that company then has a lot of employees in total. So this is a really interesting way to sort of consider how the decisions we make about how we are going to support small businesses, how much that depends upon whether or not that small business is an individual operator or whether that individual business is owned by a corporation or by a company that operates multiple locations. When you think about the kinds of Recovery Act money that was delivered out to help small businesses, a lot of that money went to firms that have multiple locations because the cutoff for what was defined as a small business would include limited service restaurants that included a lot of employees in total, even though their individual establishments might be quite small. So let's now change gears and look at the sales, shipments, receipts, or revenue size type data. Like the employment size data, we also now break it out by establishment and by firm. So this is looking at the receipts or revenue of ambulatory healthcare services, looking at the distribution of their revenue by the receipt or revenue side of the individual establishment. So we can see that by far the largest category, about $178 billion worth of the total, is for ambulatory healthcare establishments, individual locations that have between $1 million and $2.5 million in total revenue. Then we can see a little drop-off there where the larger categories of 2.5 million to just under 5 million, 5 million to just under 10 million, 10 million to just under 25 million, and finally 25 million to just under 100 million still account for a pretty substantial chunk of the industry. The smallest ambulatory healthcare businesses, those that have revenue of less than $100 million, less than $100,000, make up a very small percentage of the total, about $2.4 billion billion of the gigantic number for this industry. Now, I didn't mention it on the previous few slides, but the very last bar in these slides that you've been seeing is that we actually break out of the data those establishments, those firms that are not being operated for the entire year. Because including a business that may have started in July, including that in with the other businesses that have been operating during the entire year would really sort of skew the data. And you can see in some industries there actually is a lot of churn in that industry where you have a lot of businesses coming into fruition, coming into birth, and closing within a particular calendar year. So that's why we break it out. So this is looking at receipts or revenue size of the establishment. This is now looking at revenue size of firms. And like some of the other slides we saw, we're looking at the truck transportation industry. Firms, we can see that there are a lot of firms that have between $100,000 and about $250,000 in revenue. But when we look at the trucking firms that have more than $100 million in revenue, they make up the lion's share of the total trucking industry, this total truck transportation industry. We can see that those truck transportation firms that have $100 million or more in revenue generated about $119.3 billion in revenue of those trucking firms. So again, thinking about the importance of small trucking firms. Yes, there are a lot of them. You can see on the first chart that there's 21,608 trucking firms that have between $100,000 and $250,000 in total revenue. There's a lot of those small guys, but those small guys don't really account for a very large chunk of the revenue. Again, I want to remind you all, I've compared number of firms and revenue, but I also could have looked at the employment data, the payroll data, and even things like payroll per employment. We often see things like the very small firms often pay their employees on average less than the larger firms in some industries, but in other industries, small is good to be an employee, where the average annual payroll per employment of a small business in certain industries is actually larger, is actually higher than the average annual payroll per employment of workers in other industries. So again, an interesting comparison. So that's talked about employment and revenue size. Let's talk a little tiny bit about some of the other measures of size. So as I mentioned, when we think about firms themselves, firms can have a single location, but they also can have multiple locations. So here we're looking at information on offices of real estate agents and brokers. We can see that there are a lot of 105,000 single unit firms, a very tiny number of multi-unit real estate agents and broker firms, only 1,524. But when we then look at the distribution of revenue or receipts of those single unit versus multi-unit firms, while there are a lot of the single unit ones, they account for more than half, but certainly nowhere near the share that they do in terms of the number of locations, of the number of firms. Those single unit firms account for about $64.8 billion, as opposed to the multi-unit firms that account for $48.2 billion. So again, this is sort of a similar distribution we were looking at before. A lot of small guys, a lot of single location businesses, but the multi-location guys really account for a large chunk of the total. Now, just to give you some information about the distribution of those multi-unit firms, that orange chunk of the pie, the big pie chart on the right-hand side takes that orange chunk of the pie and splits it out into more details. And as you can see, it shows that of those multi-unit firms, those multi-unit firms that have 25 locations or more account for the lion's share of the distribution. So in the real estate agents and brokers industry, if you're a multi-establishment, if you are a real estate agent and broker office that has multiple offices that are owned by the same company, and you have 25 locations, you account for the lion's share of the data. Now, you will notice here that there is a slice of the pie that says one establishment. You may be wondering, how is that possible? How can you be a multi-unit firm and only have one establishment? And what that is that has to do with how we define a firm. A company can be a collection of one or more firms, and that company could own businesses not only in one particular industry, let's say real estate agents and brokers, but that company could also own businesses in other industries. Maybe I own and operate real estate agents, but I also own and operate some janitorial services businesses. We count each of those individual firms in all of the industries that they operate in. So a firm that does have more than one location could only have one location in a particular industry. So that's what you're seeing here. There are a number of multi-establishment firms that only have a single establishment in the real estate agents and brokers industry. So again, just kind of giving you some information about this distribution of businesses by size. The next distribution I want to talk about is the legal form of organization. And again, this is of firms. In some industries, for example, janitorial services, the blue slices, you have a lot of corporations, and where the revenue of those businesses is primarily clustered into the corporate kinds of businesses, S corporations or C corporations. You can see the individual proprietorships and the partnerships in janitorial services is far smaller than the share of the revenue accounted for by corporate janitorial services businesses. However, offices of CPAs, certified public accountants, look very different. Yes, you have S corporation and C corporation CPA firms, but the partnerships piece, these small locations really dominate when it comes to revenue broken out by legal form of organization. So again, this is providing additional information that helps us understand how different small might be defined across different industries. It just gives you some more information about that. This next one here is concentration ratios. Every 5 years when we do the economic census, we publish information on the share that the share of revenue in an industry that is accounted for by the top 4, 8, 20, and 50 largest firms in that industry. And what I've done here is I've compared the concentration ratio data for two industries. The blue bars are for grocery and related product merchant wholesalers. These are grocery wholesale businesses who sell grocery products to supermarkets and to convenience stores and other kinds of businesses. We can see that the 4 largest firms in this particular industry only account for about 14% of the total revenue of that entire industry. Even the 50 largest firms in this industry only account for 53%. So this is an industry that has a lot of players. It is not all owned by these businesses. These wholesale locations are not all owned by a relatively small number of companies. It's more distributed. Conversely, we see the orange bars for cable and other subscription programming businesses. The top 4 firms in this industry account for 62% of the total revenue of all firms in this industry. So this is one where the top 4 players in cable TV and other subscription programming, we can probably think of the cable programs, the cable businesses that we subscribe to in our homes, Comcast and Verizon and a variety of other ones that we can get our cable TV service and our phone service, et cetera, from. The top largest 4 firms account for 62% of this industry. When we think about the 50 largest firms, it's nearly 100% of the revenue in this industry is accounted for by the 50 largest firms. So this is an industry where you have a relatively small number of players. They are certainly not considered small businesses, or it would be very hard to sort of think of a cable TV provider as a small business. There are some, of course, out there in rural America, but these large guys really account for, the top players account for a very large chunk of the data. And then finally, franchise status. These are data from 2012 Economic Census. We have not yet released the 2017 data on franchise status, but just kind of giving you some information about how franchise businesses versus non-franchise businesses compare. In the full-service restaurant industry, we talked before about limited service, sort of fast food. This is looking at full-service restaurants. We can see that non-franchise full-service restaurants not only are significant in terms of the number of them. There were about 202,000, almost 203,000 full-service restaurants that are non-franchises in 2012, but those businesses accounted for the lion's share of the sales of all full-service restaurants. If we had looked at the franchise data for limited service restaurants, we would have seen a very different picture where the franchisee and the franchisor-owned businesses look much different. There's a much larger share of the limited service restaurant industry that is owned by franchisee or franchisor-owned businesses as opposed to non-franchises. So again, helping us understand the importance of small businesses in a variety of different ways of thinking of a small business in our local communities, and how much it varies by industry. So now let's talk about how do I actually get to all of this great size data in our data.census.gov application. I actually have included some screenshots here in the PowerPoint, but I'm actually going to jump out live to our browser so I can actually go live here and show you how to get to the size data in the Economic Census. So let's say I was interested in looking at those doctor's offices. So I went to American Fact Files, went to data.census.gov, and I want to go in and I want to find information specifically on those physicians' offices. So I'm going to choose NAICS 62. I'm going to choose ambulatory healthcare services, and I'm just going to go ahead and choose the ambulatory healthcare services total. This is one of the industries we looked at in the table. The next step I'm going to do is I'm going to go to surveys, and I'm actually going to come over here and I'm going to scroll down through these surveys until I find the link for the establishment and firm size data from the Economic Census. So I'm going to kind of scroll down, keep going, U.S. basic data, and then I get this over here, U.S. size data. Now, you'll notice that there are two options here. There's one that says Economic Census U.S. size data, and there's one that says establishment and firm size. If I choose this first option here and click search, I'm going to be able to get to all of the 2012 Economic Census tables. These aren't the ones that I really care about. I really want to go back and I want to look at the 2017 data. So when you're going through this menu system, I encourage you to please be careful when you choose the particular survey program in data.census.gov, because the one that we actually wanted was the second one here, the establishment and firm size reports. When I then say that's what I want, now I have those 7 tables that we've been talking about throughout today's presentation. Here's the concentration data table. Here's the employment size of establishments data table. Here's the employment size of firms data table, etc. So this is a much easier way of getting to those detailed tables. So, for example, I'm going to click on employment size of firms. So, again, we're still talking about data for ambulatory healthcare services, and we want to see how much do these ambulatory healthcare service businesses account for of the total, how is it broken out by the different size categories, and et cetera. Now, I did see, out of the corner of my eye, one of you asked a question about nonprofit. In the Economic Census, we do not publish data specifically on profit or nonprofit businesses, but what we do typically publish is data on businesses that are subject to or exempt from federal income tax. And tax status is really the closest thing that we get to profit, nonprofit that we have at the Census Bureau. We don't actually publish data anywhere on nonprofit. Those businesses that are exempt from federal income tax are not a perfect proxy for nonprofit, but it's close. And historically, we have published data on business size broken out by tax status. For the 2017 Economic Census, unfortunately, that is one of the breakouts that we no longer are publishing. However, if you wanted to go in and look at the distribution of businesses by tax status in our other published statistics as part of the Economic Census, and then wanted to look at the size breakouts, you could then make some leaps of faith and say, if this is the distribution of all businesses by size, and this is the distribution of those businesses by tax status, if we make some assumptions that the distributions are similar, you could then sort of come at and approximate what the share of nonprofits are of these types of business totals. So unfortunately, like I said, it's sort of a bummer that we don't have that data anymore. But these information are all available. You will notice that even in the firm size tables, we do publish the data on the number of establishments as well as the number of firms. So this is a firm-based table, but we still do have the data on establishments versus firms. And I have seen a couple of quick notes that have popped up about the other sort of characteristics data, and you'll actually learn more about that in just a moment. So let me jump out of here. So that kind of gave you an example of how you can actually access the data in data.census.gov. So again, we chose the U.S. size data. This gave us the establishment and firm size breakouts. Now, the last point that I want to make before we take some questions is that these data that we've been talking about on data broken out by business size are available not only in the Economic Census, but they're also available in a few other programs at the Census Bureau. For example, our Business Dynamic Statistics publication does include information on job creation, job destruction, establishment and firm births and deaths, and the data are broken out by establishment size and by firm size. So if you wanted to get information on how are small businesses growing, are you seeing a lot of job creation and job destruction in those small businesses? Are there a lot of firm or establishment births and deaths in small businesses versus large businesses? That type of data would be available in our BDS, Business Dynamic Statistics program. Annually, our County Business Patterns program also publishes data on labor organization and employment size of establishments. And these data are available in the data.census.gov platform. You can go in and actually access those information. And I want to remind you all that County Business Patterns covers employer businesses, businesses with one or more paid employees. You could go in and look at for 2018, and then next year you'll see 2019, 2020, 2021. Annually, you'll be able to see data on the importance of these small businesses broken out by employment size of the establishment. Now, one tip about County Business Patterns includes data on number of establishments, employment, and payroll, but CBP does not publish data on revenue. So those interesting comparisons that I was making between the number of small establishments in an industry versus the revenue of those small establishments in that same industry, those kinds of comparisons you can't make with County Business Patterns because that program does not publish data on small business on revenue. The third bullet here is our non-employer statistics program. I saw one of you posted a note asking about, do these data include the little small businesses, the self-employed people? The short answer from the Economic Census is no. There is no data in the Economic Census on non-employers, and that is because we have an entire program at the Census Bureau, non-employer statistics, that annually publishes data on those self-employed people. The non-employer data is broken out by legal form of organization and by revenue size, and by definition, one could argue that all non-employers are small. Each non-employer essentially is a business with one employee. But if you wanted to further break out those non-employer data based upon the revenue size, for example, of those non-employers, for example, if you were interested in looking at how consultants in Northern Virginia, how do they compare to consultants in other industries, and you might see that the revenue breakouts for those consultants in Northern Virginia is quite a bit higher than it is in other areas of the country. This is a great place to be a consultant specifically for the government. Now, the fourth bullet here is our quarterly workforce indicators. This is a quarterly program that provides employment and earnings data broken out by firm employment size. So instead of those establishment employment size, this is firm-based data. And again, I provided a link to a data tool called QWI Explorer, where you can go in and actually look at this quarterly data. Again, it's employment and earnings data. There are no statistics in this program on revenue. And then finally, we publish size-based data in a program called Statistics of U.S. Businesses. This is annual data on employer businesses by the size of the enterprise. Another word we can sort of think of as firm or company. And again, I provided the link to that data as well. So in summary, we have a lot of information on business size. These data in the Economic Census are being released on a flow basis. We've released most of the data from the Economic Census, but there is some more data coming. And while I focused in this webinar today the national size data, there are some selected statistics available that allow you to drill down to state-level data in these business size breakouts. So I would encourage you all to explore in our data.census.gov platform those additional size breakouts that are available at the state level. You will see, for example, that size breakouts in some states for a certain industry might be very similar to the size breakouts for that same industry in another state. And in other industries, they're very different. Some industries tend to have a lot of small businesses in a certain state, where in another state, that same industry, it's mostly larger businesses. It's just sort of amazing how different our country is when it comes to how businesses have sort of grown and established. Now, again, while the data that we publish by size have changed in terms of the organization and in terms of the size breakouts, most of the data are pretty similar. So it is not only much easier to access those data across the sectors, but now you can do better comparisons across sectors, and it even will allow you to more easily compare the 2017 size data to the 2012 size data. That's actually something I was going to do in this presentation today. It just was too much data for us all to take in 1 hour, but I didn't do that. But seeing how size businesses, small businesses have changed over time is something that you could do using these data. Finally, you need to learn how to use data.census.gov. This is our enterprise dissemination platform at the Census Bureau. I would encourage you all to learn how to use it. It will be the key repository for all of the economic census data and a lot of the other data that I talked about today, and we definitely want your feedback on it. If there are things about it that you love, let us know. If there are things about it that drive you crazy, like the one little point that I mentioned where the 2012 data is in one survey area versus 2017 data is in a different survey, I don't understand why they're in two different surveys, but that's just the way it is. That's the kind of feedback that they want to hear as well. And of course, we want you to promote using our data, using this platform with your colleagues. So with that, I am done. Anthony, why don't we go ahead and see if we have any questions that came in via the chat, and then we will ask our operator to see if we have any questions of folks who are listening on the phone.
Sure. Operator, do you want to give instructions for the phone while I read the first question?
Thank you. At this time, to ask your question from the phone, please press *1. Please unmute your phone and record your name clearly at the prompt. Once again, *1 for questions on the phone line.
I'm just going through all the awesome feedback we got on audio broadcasts. We appreciate that. We got an overwhelming majority that used audio broadcasts. We got a few issues with audio quality, but that could always be, your local streaming, and bandwidth. So let's get here a question about business. You had a slide in on employment size of firms. I don't know if you can go back to that. They just wanted to see the previous slide on that.
Right. So this slide, employment size of firms, was comparing and contrasting how different the size breakout data when you think of employment size of a firm, how different that distribution can be versus the employment size of an individual establishment. So this industry was the limited service eating places industry, which is basically fast food restaurants. We can see that from a firm perspective, there are a lot of firms that have a very small number of employees, but it is really the firms that have a lot of employees, the firms that have multiple locations and therefore have lots of employees within that firm that account for the lion's share of the breakout. If we had looked at this same industry, limited service restaurants, in terms of employment size of establishment, we would have seen a very different picture. We would have seen that there are a lot of small limited service restaurant establishments, and that those small guys actually account for the majority of the revenue of those individual locations. Because again, we're looking at individual establishments as opposed to looking at entire firms. It's hard to sort of imagine a single limited service restaurant that has 250 employees. Most of the fast food restaurants that we frequent on a regular basis have a relatively small number of employees, and those small locations with a small number of employees really account for a very large share of the total sales. But we then think about all of those establishments aggregated up to the firm level, then we really see how in this industry you have a lot of firms, a lot of companies that own multiple small locations that together account for a very large share of the total in the industry. So yeah, that's sort of what the purpose was of this particular slide.
Great. Operator, do you want to cue that question up?
Thank you. It is from Flora Rivera. Your line is open.
Yes. Good evening. I was wondering if the census had taken a notice on the prices of the houses. I mean, it's $200 plus the interest. It has gone up in certain states, and there is not a lot of jobs. Right now we were sent home. Some of the people lost their jobs. Some of the people were asked to return. Some didn't, so they were unemployed, and then still waiting to see what's going to happen.
Right. So I guess the answer to your first part of your question is yes, the Census Bureau does publish data that looks at the value of housing, the value of homes. And we publish that data in something called the American Community Survey. It's an annual survey that we publish that has detailed information all the way down to the census tract level, and that data does include information on house value. So yes, we definitely have data that would help you compare and contrast the household income in a particular area to the house cost, the value of the homes in those areas. In our economic programs, in the economic census, for example, that we talked about today, we don't really per se have information on house value in the economic census, but it's actually sort of an interesting thought because when you think about, or an interesting concern, because when we were talking about the data on real estate agents and brokers, when you look at that data, the revenue data of those businesses broken out by geography, by state, and by county, you really see that there are counties in the United States where the revenue of real estate agents and brokers is a huge number in comparison to the revenue of those real estate agents in other counties, maybe even in that same state. And as you all, I'm sure, well know, the revenue of a real estate agent and broker is tied to the house value. If I was a real estate agent and I was selling $1 million home versus a $100,000 home, the amount of commission that I would receive for that sale would be very different for that $1 million home than that $100,000 home. So you can sort of get a glimpse at how much the house values vary when you look at our economic data for certain industries like real estate agents and brokers. But again, I would encourage you all to check out the American Community Survey for that type of data. And certainly there's the concern that as these house prices have gotten so high and we've now come through this really horrible pandemic, how are people affording to be able to purchase homes in those communities where the house price is still so high and yet where their household income has really suffered due to the pandemic? So, yeah, a really interesting study. So thank you for the question.
Thank you.
We have another question on the phones.
Great.
And it's from Heidi. Your line is open.
Hi, can you hear me?
Yes, I can.
Just a question. I was on one of your last webinars, and I was wondering, it's a two-part question. I was wondering, when you guys collected the data for this year's census, is that automatically input or ingested into the system?
Okay, so let me try to restate what I think you're asking. So for the 2017 economic census, we asked businesses to report their activity during calendar year 2017. And right now we are publishing these data on the annual data for calendar year 2017. As we do our annual programs and our quarterly programs and our monthly programs, these reported 2017 economic census data do affect the data that we collect and publish in the more timely annual, quarterly, and monthly surveys, because we use the economic census and the data that's reported as a baseline or as a benchmark for those more timely sample surveys. For example, if you were thinking about, if you wanted to look at the annual survey of manufacturers data, it's an annual data set that covers the manufacturing sector, the data that's published in there is directly based upon the manufacturing sector data that's published in the economic census. So we get a complete census of all manufacturers every 5 years, and then annually we do our sample survey from that complete universe of all manufacturing businesses, and we then conduct a sample survey every year in between the censuses. So it is definitely important that businesses respond to our economic census. It's important that that they use the information, and it's because these data become the baseline or benchmark for a lot of our other programs. And I'll also say that a lot of the data that you see published by the Census Bureau goes into other federal agency programs. For example, at the very beginning of this presentation, I showed you all how much the definition of what a small business is defined as, how much it varies from industry to industry according to the Small Business Administration. SBA uses some Census Bureau data to help define what are those small business size ranges. And as businesses change, those size ranges can change. So again, it's a very important resource for a variety of purposes.
Sure, and I was just wondering if that data, once you collect it from the surveys, does that actually get updated relatively immediately in short order, or does it take a while?
Yeah, I mean, obviously, we are still publishing the 2017 Economic Census data. We completed collection of the 2017 Economic Census data around the end of in August of 2019. So we gave businesses quite some time to complete their economic census forms. Once we completed collection of data, we began the analysis of that data and review of it, and we started publication of data in September of last year. We are now about 2/3 to 3/4 of the way done with the economic census. We have some more data coming into next year. The economic census takes a long time to collect the data and then to analyze and review it, because we want to make sure that every 5 years we get a complete, comprehensive, and accurate measure of business activity. And there's a lot of analytical time that we spend looking at the reported data and contacting businesses if we feel that the numbers that they reported to us might be sort of questionable. So, for example, let's say that you owned a business, and let's say in your business, when you reported your employment and your payroll, the average payroll per employment, when we looked at your reported data, said that your employees were earning $120,000 a year. In that industry, in the industry that you work in, on average, most businesses, their employees earn $12,000 a year. We would probably call you and say, hey, your employment and payroll numbers seem to be a little out of whack. Did you add another zero maybe to the payroll data? Did you forget a zero on the employment data? So we do a lot of analysis in the economic census, and it's part of why it takes us so long from when we finish completion of the collection to when the data are published. When you think about programs like our monthly economic indicator surveys, though, an economic indicator survey has a 28-day turnaround. So from when we collect the data for that particular month, let's say the monthly retail trade survey, when we collect the data to when we publish the statistics is typically around 28 days. So that survey, it's a very small sample survey, but we spin that data really quickly because no one wants monthly data that is 6 months old. You want data that's really timely. And that's where sort of looking at the different data products that we have at Census is really important, because for really timely data, we have that, but it's not very detailed. You're not going to get the geographic breakouts. You're not going to get a lot of these really detailed size breakouts that we talked about today. For those more detailed data, you need to go to a less frequently conducted survey because we have the time. We have the ability to collect the volume of data. The economic census forms that we've used in the past could be up to 20 pages long because of the volume of data that we ask businesses to report. That means we have a lot of published data, but it's also a lot of data for us to review to make sure that the businesses got it right. So, yeah, it's a constant tug of war, I guess I'll say, at the Census Bureau between timeliness and detail. Everybody wants really timely data and very detailed data. It's very hard to have both.
Okay. All right. Thank you.
You're welcome.
We are showing no further questions on the phones.
Great. Let me go back over here to my contact slide again, just to share with you all my contact information. Again, if anybody has any other questions, or Anthony, did we have any questions that we still had in the chat? We can answer those now. If you want to contact me, again, directly, please feel free to. My email address and phone number are here on the slide. Anthony, do you want to see, do we have any other questions that came in on the chat that we can answer now?
There's a few, but we ran out of time.
Okay. Okay. Well, what we'll do is, if you want to contact me, if you didn't get your question answered, please send me an email, and I would love to hear back from you. And again, thank you all so much for attending today's webinar, and have a great afternoon.
Thank you. That does conclude today's conference. We do appreciate you attending. You may disconnect at this time.